morning, and thank you everyone for being here. This is an amazing conference with great speakers, both international and local, and huge congratulations to the Code Emotion team for setting up this. What is the topic of my, the topic of my presentation? I will describe with a different angle the crypto market. So not just the traditional cryptocurrency investing or token economy or speculative trading. We're trying to focus on the startups, companies, technology, teams with the risk capital point of view. Of course, I will mention several companies in my speech, but please consider that I'm not advocating them necessarily. Sometimes I'm just mentioning companies because they raised a large amount of money, but does not mean that they are good ones. Why I am describing this? My previous career was in venture capital, so technology investing, and I'm now the managing director at Endeavor. Endeavor is an organization that supports scale-up companies, so companies after the startup phase, in order to help them, to help entrepreneurs to raise capital, expand to international markets, and access talent. Like we are helping companies like Satispay, Money Farm, Talent Garden, and so on. Previously, I wrote a book called Hacking Finance with Francesco De Collibus. Francesco De Collibus is a Renaissance man, former IBM developer, now big data software engineer in Switzerland, and also one of the founders of Spinoza.it. And if you want to go in depth about the topics that we will discuss today, you can find few articles, for instance, in Limes, the geopolitics journal, Internet Policy Review, Deutsche Bank, Deutsche Bundesbank conferences, and so on. What was the start of everything? Probably everyone in this room had the opportunity to read the original Nakamoto paper. So the conceptual object that that merged peer-to-peer technology with strong cryptography, with proof-of-work algorithms, and with the blockchain. After that, during the last 10 years, there was a very strong wave of innovation, basically simplified by the Bitcoin. Bitcoin not just as an object of investment, but as a system, as a new technology that enabled things that were almost impossible just a few years before. Okay, new wave of innovation in payments, store of value, and then the wave of innovation in alternative cryptos and blockchains and so on. What was interesting about Bitcoin was the fact that in the previous 200 years of experiments with alternative currencies or even digital currencies since the 80s, they were actually fragile. So most of the complementary currencies were short-lived or applicable only for very small groups of people, and they were basically failing every time that there was an inflation peak, or the founders were escaping, or there was a security fraud. Bitcoin, on the contrary, was resilient, was growing, was anti-fragile. So sometimes when there was a crash of a marketplace and the system survived, it was a proof that it was going on in a sustainable way. What was enabled by that? We know that financial institutions are centralized, stable, even with market fluctuations. We have very strong, inaccessible central banks, commercial banks, investment banks, and the finance as a system, as the nervous system of the global economy, it was almost untouchable until a few years ago. Now the situation is changing. Now we can hack finance, we can take the box of finance and change what is inside, building a central bank in our room, doing experiments, even if they are short-lived, but that were almost impossible just a few years ago. If you study economics, one of the key concepts was the fact that the financial institutions existed because they connect savings with investments, they generate trust, they reply to regulators and governments, and they generally provide stability. The new wave of, in general, FinTech innovation, and but specifically of decentralized technologies, is changing a logic, a structural logic that was almost stable for hundreds of years. Why we are using the angle of venture capital investments and equity? Because instead of the traditional trading point of view, we try to look at teams, at companies, and in general at the long-run perspective, okay, like the traditional due diligence of risk capital investors. A couple of numbers. During the first months of 2018, we had more than $1 billion of venture capital investments in crypto and blockchain companies, traditional venture capital, so not the ICOs, so basically surpassing the previous year, 2017, that was almost $1 billion. And if we include the ICOs, we have from $5 to $8 billion of investments, depending on what we define as an ICO and what is the data source, but is a very high number in comparison with traditional investment size. And even if we took away the large Telegram and EOS deals. If you look at the volume of venture capital investments, there was a continuous growth over the past few years. Number of deals was oscillating. What is interesting is the fact that largest rounds are significant. So we have C or D rounds of almost $100 million every year. Just to remind you that in the life cycle of venture capital deals, there is a letter order, linear letter order. So if you're raising $1 to $5 million, is generally A round, depending on the industry and the location. B round, 5 to 20, and then C, D, and so on. This wave was also partially part of the FinTech innovation investment wave. $16.5 billion invested in 2017. Also for that, depending on how do you consider FinTech or non-FinTech, and $5.5 billion during the first few months of 2018, and of course, part of them were in the crypto and the blockchain space. Why investors are trying to understand this market, and what are the good reasons? There are also bad reasons, but those are the good reasons. The first one, of course, it was described in the previous speech, is the vision. So the future of a decentralized internet of censorship-resistant technologies and changing the world with those technologies. Of course, there is a new tech, very interesting, promising things like from the Lightning Network to other developments. It is a frontier market with very high growth rates that are basically constant through years, even with oscillations. And of course, this is a very good target for venture capital, which is trying to find a combination of high rewards and also with high risks. Asset to a new asset class, and of course, a different geographical structure. Traditionally, venture capital was concentrated in a few large hubs like San Francisco, Tel Aviv, Berlin, and the blockchain space, it is much more mixed and complex. What are the bad reasons? First one was the media hype. So before 2015, 2014, Bitcoin, crypto was considered by the media just for pornography, drugs, and illegal activities. After 2015, and especially after the Economist weekly magazine cover about blockchain, there was a huge wave of excitement, and most of the large organizations, banks, and so on, they have a proof of concept or a team exploring blockchain technologies for the good or the bad reasons. But investing for the media hype, of course, is not a good reason. Secondly, the fear of missing out. Generally, the social dynamics of venture capital investors is that they invest in groups. They tend to emulate each other, and if they consider something too risky or too strange for X years, then in the space of weeks, if they see the top funds investing there, they start to enter the market. Of course, this is not geographically equal all over the world, so this is happening in the United States, not in Italy. And of course, short-term speculation, try to invest in order to cash out very quickly the deals. There are also reasons for not investing in general in crypto and blockchain startups. Of course, there is a the noise to signal ratio is not positive, is not a good one. There are a lot of scams, immature technology. As we told you before, that we are still in the platform building phase for several decentralized applications. There is a talent shortage, like in all the IT frontier markets, like machine learning, crypto, cybersecurity, and so on. There is a huge gap between demand and offer of good developers, mainly. Market volatility, and of course, regulation. Why regulation? Not just because there is an hostile regulation in some countries, but because there is a unpredictable, very volatile framework in most countries. There are very few legislations where you can be sure or what will happen to you in the future, and you will not be punished maybe with the retroactive legislation. So this is very important. Top VC deals in 2017. I repeat, to be very clear, I'm not advocating those companies. I'm just mentioning them because of the deal size. Wallet exchanges like Coinbase reaching $1 billion valuations, almost $2 billion, and even raising their own venture capital funds. Consortiums of financial institutions like R3 or service providers like Digital Assets. In 2018, we saw also traditional fintech companies like Robinhood, the stock trading app, entering in the Bitcoin space, reaching very high multi-billion dollars valuations and raising $350 million of money. And other providers like Ledger and so on, raising capital from institutions like Andreessen Horowitz. This is also important as a discontinuity, because before 2014, approximately, most of the top breed VC funds were not investing in crypto. With Coinbase, that started at Y Combinator, then Andreessen Horowitz, most of the top players started to explore this area. Geographically speaking, as I was mentioning before, this is very strange. This is not like the whole venture capital market works. Most of VC funding is hyper-concentrated in few locations, and crypto and blockchain are different. In Central Europe, in China, in Singapore, we are seeing a very different dynamic. It is changing also in other industries, like in consumer internet. China is very important, but this is not true for most of the tech segments. What kind of organizations are investing? Different typology of groups. For instance, we can see traditional top-level venture capital funds, such as Sequoia Capital. Sequoia are the guys that invested in Apple, in Google, and some of the top deals across the last 30 years. NIE, Chinese firms, the top accelerators like Y Combinator. Just to remind you, Y Combinator was basically the starting point of Dropbox, Airbnb, Heroku, Stripe, and so on. New typology of funds like Pantera, so dedicated funds, and investment banks like Goldman Sachs. If we go in the smaller size, excluding Y Combinator, there are also network of angel investors or accelerators that are increasingly doing deals in this space. Like the previous slide, traditional institutions like Techstars is one of the top accelerators in the world, doing on a continuous basis rounds in this space, and also new entities like Blockchain Capital, Digital Currency Group, doing repeating deals in this area. The knowledge building over time and also the greed created new typology of structures, so not generalist investors, but vertical specialized investors from the capital market size, so hedge funds and also structure for the venture capital part. So Pantera is considered one of the top ones. From the point of view of mutual funds, insurances, pension funds, so traditional conservative investors. This space, of course, is perceived as too risky. But even if 10% is considering to move capital as a limited partner or as an investor in this area, this is interesting because the volume of asset under management is incredible, and there is real money there. Large technology companies, almost all of them at different levels, they have proofs of concepts or teams working in this space. IBM and Microsoft started a bit before, Google and Facebook arrived a bit later, and of course Chinese companies. They are not doing this just with intrapreneurship or internal innovation. They are doing this also with open innovation. So like corporate venture and supporting external teams. Why open innovation is important? Because even if you're Google and you have thousands of top-level engineers, the volume of innovations outside the organization, it will be higher, and also in large organizations, it's very hard to do changes that are not incremental. Small teams, hungry teams, generally are better than large organizations at doing this. So you need to grasp the extended neural network of other people, developers, teams, companies, startups, and so on. Examples in Italy, there are many examples, this is just indicative. We have top companies like The Rock Trading or Green Address. They will speak at this conference, and they are amazing with top-level technology, and they were also early movers in the market. You have companies like Conio, using basically generating consumer Bitcoin wallets with very good user experience, or companies like Neutrino doing cybersecurity and de-anonymizing blockchains and analyzing cryptocurrency flows. And so let's couple of words about ICOs. This is the picture of an ICO. Of course, it is an internet meme, is a joke, but not so far from the reality, because a lot of projects starts like this with a grand vision and then end like that with very unsophisticated products or with a mess of interconnecting complexities. ICOs, of course, are now the topic of the day, at least during the last 12 months. Many teams are trying to raise capital with this form of crowd sale, with the legitimate or not legitimate reasons. The volume of investments in ICOs was staggering, was incredible. As I told you before, depending on what the data source is and what do you consider as a real ICO, it could be 9 or even more than $12 billion, but it's a lot of money, especially if compared with traditional venture capital investments. There is a huge multiplier, and there was a growth rate that was very strange. Of course, this wave is changing, so we are shifting from traditional ICOs to private sales, but this is very interesting. Why people do ICOs? I would say there are some reasons that are very important. They are, of course, global. They are accessible to anyone, easy, fast, and flexible. Those reasons could seem very trivial, but it's not like that. Venture capital investments are hyper-local, so VC funds, they tend to invest in a couple of miles away from their office in most of the time. Venture capital investments are very rigid. They are put in very strict regulatory frameworks and term sheet structure of deals. And their due diligence in VC funds is very slow, and there are multiple rigidities. Even not only if you want to receive capital, but also if you want to invest capital. ICOs basically bypass all of those limitations. So what can we learn is that maybe ICOs, even if they are a total bubble, we can learn something from them. And maybe the VC space should direct a bit in this direction. Of course, this is not a perfect market. ICOs are in a bubblish environment, so with dump money, a lot of scams, unexperienced founders, sometimes immature technologies or technologies that are not thought carefully for ICOing, and of course distorted incentives for teams. So some of the token sales, they have a they have a distorted incentive structures that do not create the conditions for generating product or services that will scale in the long run. Few ICO deals, a couple of examples, like Tezos last year, $230 million for a platform smart contracts, Filecoin, mentioned also before, for the decentralized Dropbox, also raising $250 million, or companies in the consumer electronics space like Senior Labs, also with over $100 million. Other example, the dynamics is continuing this year. We can do many examples like Banquera, Dragon Coin, and of course, we can see the outliers. So the outliers, like probably most of you heard about and use as a messaging app, Telegram. Telegram has 200 million active users per month. It's an incredibly successful application. And with the TON network, they sold a grand vision of decentralized the internet, but of course, this will be very hard to implement. And raised $1.7 billion of funding. Is an incredible amount of money if you compare this with the traditional startup investments. And other outlier, of course, EOS, with a long run open ICO, raised $4 billion, and is of course for another platform for decentralized applications, but this is very, very strange if you compare these numbers with the amount of money that the smartest investors in the world are putting in startup companies. And often investors do this in companies with before not even product market fit, but before minimal viable products, before any kind of validation. So this is a very risky and risky space. If you are valuing ICOs, I suggest you to take account at least of 5 elements. First, of course, is a team. So technically skilled team, motivated team with completely public profiles, and if they want to build an ecosystem with a token in the ecosystem, the level of the community. This is super important. Secondly, evaluating not the vision, but the actual technology, product, or service, and how they can execute on the product, how they can scale the product if there is a potential market. Those are trivial things, but people forgot them in the ICO space, and there is a wisdom to grasp from the traditional investing approaches. Third, do they need a blockchain? Do they need to be in crypto? Do this kind of product or service make sense with the blockchain? Because as you know, there was a complete hype for blockchain applications, but only on the multiplicity of use cases. Just a small segment of them will be efficient in terms of time efficiency, cost, in comparison with traditional databases. So not all the potential applications of blockchains will be useful, will be successful probably. Token sale economics, very often, not only the teams, but very early investors are subsidized in an inefficient way for the whole market, and the product or service could not be delivered with realism. And of course, security. Even when the team is okay, the token sale is okay, when you put a lot of money in a not very mature technology, the vulnerabilities from the point of view of cybersecurity are significant. So this should be an element of evaluation in most of the projects, in my opinion. So what are the potential scenarios? I would say there is a basic one, which is already happening. So crypto finance and generally the crypto space is part of the FinTech innovation and maybe will expand in other industries. This is already happening. There is an optimistic scenario where the store of value and payments will be like the new SMTP for email, so the global standard that will be applied and will change maybe the way in which do economic transactions in general. Maybe entire industries will be reshaped by the blockchain, like the IoT, but we don't know. Maybe that could be a potential outcome. Of course, there are pessimistic outcomes, new bubbles like the dot-com bubble or new mega bubbles in token, say, in the token economy that will be even higher than the previous one last year, and it maybe affect other parts of the economy. That could be actually simultaneously with that optimistic scenario. And of course, the utopian or dystopian view in which crypto technologies, decentralized crypto technologies, will change the way in which financial institutions, governments, and large organizations works, and that could be a good or a bad thing depending on your point of view. I think that we are building together this world. We need to do collective choices, study in depth, and I think that this conference will be very useful for that. So thank you, and enjoy the conference.
Thank you, Raffaele. Thank you. Do you have some questions for Raffaele? 2, 3 questions, no more, so we can enjoy the break.
Hi, my name is Mauro.
Yes.
Are there a checklist in order to launch a new ICO? For example, if tomorrow I want to launch my new cryptocurrency, what I have to do?
Okay, if you want to launch your ICO or cryptocurrency, so what are the
I want to launch my cryptocurrency using an ICO. So I want to raise some funds. I want to sell my tokens for my application, and then I use an ICO.
Okay, I will split the answer in 2 parts, because there are things that you need to do and things that that will advise you to do because they are more meaningful. So what you need to do, of course, you need to select the technology platforms, so understanding the ERC20 or other systems to do that. You need to find a community. You need to find a tech team that will be able to implement your vision. Those are the basic things. You can find that online. There is a very streaming process now. What I would advise you to do is to go beyond that and try to find something that people want. So do not just embrace a vision. Try to find a product or service that you can meaningfully say you have empirical evidence that could be applicable on a larger scale. This is not very different from startup investing for me. Secondly, choosing the people that you work with, because the fragility of the teams in the crypto space was very hard, because sometimes they are made by people that just met for a few hours online and then they decide to do the ICO together. It's not like that. If you want to do a project for the long run, it's like a wedding. You should stay together in the good and bad moments of your life. You have to risk, you have to walk moments of stress, and if you want to create a successful project, and by successful project I mean something that will stay for the years, you will choose very carefully the people you work with. So I will start with that, then technology, then the product, and then everything else.
Yes. I'm Fabio, yes. And thank you for your point of view and your tips. I will understand this part of your speech, like the fear of missing out. The new ICOs needs to know when to enter in the market, like they need to compare with the other cryptocurrencies like Bitcoin or not. Why I ask this? Because Bitcoin has an halving algorithm that puts it in a position with the currencies that goes on idealistically. So the ICO, when should go out?
Okay. So if I understood correctly, the question is, do I have to compare myself with existing successful technologies like Bitcoin? Yes and no. Yes, because there is a lot of data available in the market. It's very interesting to look at what was successful in traditional IT investments and startups. The top companies were created even if there was something before, like Google was not the first search engine, Facebook was not the first social network. But in the case of Bitcoin, be careful because is a difference. I would say it's a different story. So the path dependency of the market is very strong. I would say that it is very useful to innovate, but it will be very, very hard to replace Bitcoin. Maybe it will happen in the future, but for now, I think it's very hard. And Bitcoin is not a stable object. It's evolving over time. It's improving over time. So some of those innovations will be incorporated inside.
Hi.
Yes.
I have a question about upcoins. I mean, yes. On internet, some kind of people say that in future we will have many upcoins. But to me, it sounds like quite stupid. I mean, a cryptocurrency to pay taxes, a cryptocurrency to pay kitties. And from your point of view, do you think that, I don't know, we will have one or more cryptocurrency that will be seriously store of value? Or, I don't know, do you think that this kind of project that just want to be a way to pay things will have a future? Because I will, in real life, I will pay for a token for the roller coaster. When I want to go to the roller coaster, I don't pay for 1,000 of roller coaster rides if I'm not sure that I will consume that kind of token. How do you see this situation?
Okay. The short answer is I don't know. The long reply is that there are different scenarios. One scenario is related to the dominance of Bitcoin. I'm not a Bitcoin maximalist, but I like to put the lens of the Bitcoin maximalist when evaluating other tokens. I think this is very important because of the intrinsic merit of the technology. There are intermediate scenarios where Bitcoin is like the digital gold and the other crypto asset will be maybe pegged to that or in some kind of way linked to that. And there are scenarios where there will be a multitude of altcoins and tokens for specific applications. I don't have a specific reply to this. I don't know what will happen. It depends from many technological bifurcations that we will see in the future. It will depend on how Lightning Network will be, if it will be successful or not. It depends on many factors that are not predictable now, in my opinion.
Okay. Thank you. Thank you, Raffaele, again.